Good morning. It is Monday, June the 22nd, 2026. We hope everyone had a nice weekend. We're definitely getting into that time of year where it gets warm. It gets warm down here. It's not nice to play with the kids. Again, a lot of street hockey and ballet and a lot of yelling and crying of boys, fighting in my house. In a healthy way, most of the time, I would say. But so we hope you had a nice weekend. Markets last week were a little bit higher. All right, so yeah, kind of the two big headlines dominating the markets. SpaceX, kind of the first week of its public trading, and then the first Federal Reserve meeting with Kevin Warsh as the new Fed chair. So let's start with SpaceX just because that's what everyone's talking about. And if you haven't watched last week's video, I think, I went on a longer rant, just kind of outlining the situation with this SpaceX IPO because it is unprecedented. Just the size, the magnitude, the trading. And as expected, last week's trading was fascinating. And I think it will continue to be that way for a number of weeks and months ahead. All right, so you had SpaceX come out, again, as expected with many highly anticipated IPOs. You get that first day pop. All right, so it opened at about $180 a share, the previous Friday. All right, and then we have our first full week of trading. And at one point, you saw it go all the way up into around, I think, north of $220 a share. Might even got to $225 or so. And then since then, kind of late last week, it's lost 20%, so 20% lower. Last I looked, back in the low 170s today. All right, meaning you have a lot of investors already underwater. Now, as I pointed out in last week's video, I have no idea what this stock is going to do, particularly in the short term, because as we outlined last week, there are literally billions of dollars of forced buyers into this stock. All right, so we outlined, the majority of index funds have changed the rules for a forced inclusion, like much earlier than most IPOs get. All right, so given we're having, it's literally billions and billions of forced buyers that in the next couple weeks, they have to buy the stock regardless of the price, right? Because they need to track their index, right? That's what index fund managers have to track their index. So there are forced buyers, billions of dollars, which is without question a huge tailwind for the stock. Now, with that being said, on the other side of it, I think you're going to have a lot of smart money. And I don't know this for sure, but I know there's a lot of smart money that's going to look at it. SpaceX trading at 100 times sales. We went over this last week. And as more shares become available to borrow and short, all right, so bet against, like that could cap some of the index fund buying. And then the other thing I'm concerned about is just some of the early investors, once their lockup periods expire, right, that I'm guessing a lot of them are going to want to sell at 100 times sales. So just fascinating with the tailwind of forced buying of billions, and yet, I think when more hedge funds are able to as the float increase and more shares become available to short, it's just expect tremendous volatility in both directions in the coming weeks. I think it'll continue to just be incredible. So again, like I mentioned last week, do I think you should buy this stock? I'm not. I can tell you that. Like at 100 times sales, like history's not in its favor. But again, disclaimer, like I have no idea what the stock's gonna do. But okay, so Kevin Warsh, first meeting as Fed chair. So I guess let's start with what was expected. No change in interest rates, all right? And given the economy seems to be fairly healthy, with some concerns on inflation, like that makes sense. Consensus was there would be no change in interest rates. What was a bit of a change, a bit of a surprise, Some of the inflation forecasts were bumped up a little bit as compared to the meeting, the last Fed meeting. All right, and so you still have some divided opinions on the Fed, which that's probably a healthy thing. The market definitely took the meeting as a whole as hawkish. All right, so not very accommodative, a little concerned, and so the market reaction, the biggest part was you saw the front end of the yield curve. So that just means like short maturities, right? So fixed income instruments that are coming to maturity in the more near future. You saw those yields rise quite a bit, and basically what that's forecasting is again continued reduction in the probability of interest rate declines, right? Interest rate cuts, and even like an increased probability that if inflation keeps ticking higher, maybe even a hike later this year. So we'll see on that. Implications for what you can do as an investor. Just whenever short-term rates rise, what that means is there is additional incentive for like money market funds. That means like your money market funds are going to start yielding more. All right, so additional incentive to ensure your cash positions are optimally allocated, right? So if you have money sitting in checking savings, maybe a bit more than you need over the next couple months, but you still want it safe, like just moving it over to the money market side where those yields are going to go higher, right? That risk-free yield is going to be higher now with short-term interest rates going up a little bit. So just decided to bring that up. Questions, comments, concerns, don't hesitate to reach out to our team. And we hope you have a great week. Thanks.